Now, that would be something that would happen pretty quickly, and but it would be a smaller version of the Bitcoin reserve, right? So if they stay the course and they go for the Bitcoin reserve, then we're talking about the U.S. government buying 1 million Bitcoin over the course of 5 years, 200,000 Bitcoin per year for 5 years, which would be 5% of the total supply, which actually would be it would be more than 5% of the liquid supply, because there are millions of coins likely have been lost. So this would be a very big deal. Now, what would happen would be that it would have to be passed that way, and then the government could go buy the Bitcoin after that. So what do you think would happen if the United States government passes this? They say they're going to buy 1 million Bitcoin. Yeah. What do you think all the other governments and individuals in this world are going to do? Yeah. Obviously, they're going to go try to front run the government and buy it before them.
James Lavish explains the intricate structure of the world financial system, highlighting the unaffordable character of public debt and the unavoidable fallout from careless monetary policy. He describes the ticking time bomb created by central banks' reliance on constant liquidity injections, which drives investors to seek refuge in hard assets like gold and Bitcoin. Lavish also examines how Bitcoin is becoming more and more prevalent in institutional portfolios, highlighting how it may be used as a hedge against systemic risk and currency depreciation. He cautions that traditional markets may see significant turmoil as economic uncertainty increases, making smart asset allocation more important than ever. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
How such a reserve might be introduced, and more importantly, how quickly it could happen?
Yeah, that's a good question, Jeremy. What's important about Senator Lummis being involved in all of this and being put on that committee is that she's been spearheading this for over a year and a half now. And so she introduced the bill, the Bitcoin Reserve Act. And so it still needs a co-sponsor. It's very early in its drafting because of that. And there could be changes to what the current, thought about it is. But with this new administration in office, there's a likelihood now that this gets done in due time. How quickly it happens, it's hard to say. There are a number of things that Trump could do, and there are a number of things that Congress could do. But it would have to go through a legislative gauntlet. And if it's going to happen the way that Senator Lummis wants it to happen. And so that would mean it would have to go to committees, it would have to be revised, it would have to be approved. And so that it would take some time to do it that way. There's another way that Trump can do it, and he could use something called the Exchange Stabilization Act to just through executive order and add Bitcoin to the balance sheet that way. Now, that would be something that would happen pretty quickly, and but it would be a smaller version of the Bitcoin reserve, right? So if they stay the course and they go for the Bitcoin reserve, then we're talking about the U.S. government buying 1 million Bitcoin over the course of 5 years, 200,000 Bitcoin per year for 5 years, which would be 5% of the total supply, which actually would be it would be more than 5% of the liquid supply, because there are millions of coins likely have been lost. So this would be a very big deal. Now, what would happen would be that it would have to be passed that way, and then the government could go buy the Bitcoin after that. So what do you think would happen if the United States government passes this? They say they're going to buy 1 million Bitcoin. Yeah. What do you think all the other governments and individuals in this world are going to do? Yeah. Obviously, they're going to go try to front run the government and buy it before them. Well, I mean, there are a lot of things that are tailwinds. There's some developments that have happened that are tailwinds for Bitcoin, and these are some of them we've discussed. SAB 121 repeal, finally being repealed, that's a big deal. A Bitcoin Reserve Act, even bigger deal. But before that, there have been a few tailwinds that we haven't discussed. One of them is the new GAAP accounting. The new GAAP accounting, which was passed back in 2022, but it just went into effect this past December, was how you hold Bitcoin if you're a company, how you hold it on your balance sheet, in your treasury, and where you mark it at. prior to this new GAAP accounting, you would have to hold this asset. If you bought Bitcoin and it went down, you had to hold it at the lower of your cost or the lowest price that it went to. So you could see is if you go back at Microsoft, at MicroStrategy's balance sheet, you can see how Michael Saylor had to hold this Bitcoin on his balance sheet for years because it went down to under 17,000. He had to hold it there. Anything that he bought that was at the lowest cost of lowest price that it went, and it was called an impaired asset. Now this new accounting is you can buy Bitcoin and hold it on your balance sheet at fair market value, which is normal for an asset. So that's a really big deal. And the only way you could get it off your balance sheet at an impaired value before was to sell it, and then you'd have to take the tax consequences of it. Even if it went all the way back above where you bought it, you still had to hold it at that impaired cost, so that impaired value. So now you can hold it at fair market value. And that will, I think, enable some companies that have kind of been on the fence and adding Bitcoin to their treasury or their balance sheet. Now they can do it without worrying about it being held as an impaired asset. And so that's a pretty big tailwind that just went into effect. So I think we're going to see some companies pop up here that are adding it to their balance sheet. They're adding it to their treasury just quietly, slowly. And, but they're not going to be standing back waiting for that new GAAP accounting anymore. That's already done. So that's a really big deal. And then another big deal is obviously those ETFs from last year. They were launched, and you and I have talked about this. BlackRock's ETF IBIT was the record-setting launch of an ETF ever, and so it gained over $50 billion in AUM in less than a year. It was a blowout offering that it's just continued to be. It's been a great. It's been a great avenue for institutional investors to have access to Bitcoin where they couldn't before.
James Lavish emphasizes how important Bitcoin ETFs are in promoting institutional adoption. He cites BlackRock's ETF's enormous success, which amassed over $450 billion in assets in only a single year. Institutions may easily invest in Bitcoin through ETFs without having to worry about complicated trading systems, secure custody, or managing private keys. This simplified access is revolutionary, opening the door for Bitcoin to be used more widely in conventional finance. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
And now I'm seeing institutions, I watch IBIT, I watch FBTC, I watch Bitwise and some of these other ETFs that are the spot Bitcoin ETFs. I see them being adopted by institutions. Slowly but surely, they show up in those holdings now, and you can see them on Bloomberg. And so why is that? It's because it's made it so easy for them operationally, where they couldn't do this before. They couldn't hold their keys. It was a fiduciary question about who was going to hold the keys, what the hierarchy is going to be. It was a personal responsibility, a fiduciary responsibility, and then where they were going to trade it, how are they going to trade it, who their trader is going to be, how they were going to settle it, where they were going to settle it, who was going to custody it. I mean, there were just a litany of problems that they had to overcome, which have all been taken care of in one fell swoop with this ETF, where they can just buy it and just like any other stock and hold it with their prime broker custodian. They know what the leverage is on it. They know what the margin is on it. It's very straightforward. So that's opened it up. That's a big avenue for it. Back about a year and a half ago, we had, or a little over, about a year ago, it was repealed. So, but during Gensler's administration, the SEC, what they did was they kind of did an end zone run around Congress. And what they did is they had looked at the GAAP accounting, and they came up with they made a review of it and kind of a bulletin, right? So, and by doing that, they basically said they put all these risk parameters and warnings around holding crypto, holding Bitcoin on your balance sheet if you were a financial institution. And so it basically said you had to hold it as a liability as well. And so and it opened up banks and financial institutions to scrutiny if they did do that. So he kind of, instead of going through the proper legislative measures, they did a review of it, and they posted this bulletin, and then it basically put everybody on notice who was in the bank. It said, if you don't abide by this, then we may, come and have more scrutiny on your company. And they don't even have to say this explicitly. It's understood that you kind of open yourself up to an audit if you trip up on anything on this. So then they gave a lot of pushback. There was a lot of public pushback about it. Congress came in. Both the House and the Senate had passed a repeal for SAB 121. I was actually in D.C. when this happened, and I ran into Senator Lummis on the street right after their vote, and they had repealed it. And it was really exciting. It was great. Okay, great. We can put that behind us. And then mere weeks later, so Biden comes in and he just turns around and vetoes it. He vetoes the repeal. And so it was back in order. And so now the Trump administration has said they're going to repeal SAB 121, and they're going to, through executive order, they'll issue that executive order, and once and all, it'll be repealed. And so I think that's a really big deal. That another thing that has not been a real focus of Bitcoiners, but it's a big deal because this will enable banks to start operating in this space, offering products that are not currently offered for their customers. So you could buy Bitcoin or Ethereum or whatever right alongside your other holdings in your bank. You can hold it there, and they can soon start building and offering products around that, whether it's lending products, whether it's insurance products, or borrowing. There are going to be some things that they can do that they're currently not doing. That'll be easy for everyday customers to use that they currently can't. And the banks they've just been too cautious to get into it because of that one kind of not ruling, but bulletin.
James Lavish describes how the SEC under Gary Gensler issued a regulatory bulletin called SAB 121 that essentially prohibited banks from owning Bitcoin. The SEC circumvented Congress by enforcing accounting rules that compelled banks to treat Bitcoin as both an asset and a liability, bypassing the appropriate legislative procedure. Because of the additional regulatory attention and audit risk, financial institutions were deterred from incorporating Bitcoin into their offerings. Later on, Congress resisted, and SAB 121 was repealed by the House and Senate. Following the vote, Lavish remembers meeting Senator Cynthia Lummis while in Washington, D.C. But despite the support of both parties, President Biden vetoed the repeal, retaining the restrictive provisions. According to Lavish, there are now plans to executive order the repeal of SAB 121 in the event of a Trump presidency. This action might revolutionize the Bitcoin market by granting banks greater access to it. Banks might start selling Bitcoin and other digital assets in addition to conventional financial items if it is repealed. This may pave the way for new services like crypto integrated financing, insurance, and borrowing options. Although supporters of Bitcoin haven't given this issue much thought, Lavish highlights that it's an important step toward wider institutional adoption. By removing these barriers, regular consumers would find it simpler to obtain Bitcoin directly from their banks, hastening its widespread acceptance and increasing the range of financial goods offered in the market. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.